It's really fantastic to have you guys here. So I'll go around just because I want you to be here. I've already asked Tolu the question, so Tolu, you don't have to answer that question again. So on a scale of 1 to 10, 10 being how you feel very happy, 10 is very, very happy, and 1 is poor. So, Bayo, how do you feel on a scale of 1 to 10?
Yeah, 8 to 10.
Okay, that's very high. That's good.
Yeah.
You must have slept well. So, Kay.
Yes, I do.
Yeah. Kay, on a scale of 1 to 10, how do you feel?
Good.
Good. Okay, so I'll put that like around an 8 then.
Yeah, 7-ish.
Okay, that's good. That's fine. So just a recap of the flow. We'll all have 5 minutes each to speak to our topic or our discussion pointer. After we do that, I will allow any of the panelists to respond or to just add one or few points that might be missing or perspective that we might be missing. From there, I will take questions from guests. So some of the questions will come from the YouTube channel, some of them will come from DMs. Philip would help me with that, so would call my attention to it. And after the Q&A session, we'll move to the next panelist, okay? So I will say we are ready to go. So a big welcome to everyone joining us today. And for those who will still watch the replay, I would say we've been running on this all year, and it's interesting to see how the economy pretty much has moved through the times. Nothing much has changed. A lot of people probably feel that way. But what's important is we stay on top of the game, we stay active, we stay very involved, and we pay attention to the trend, we pay attention to the data. So today, again, my name is Fumi Banjo, and I'll be the moderator for this event. I'm going to go around to my panelists now and allow each of you to introduce yourselves. Okay, so I'm going to start with you, Tolu. Tolu, tell us something about you. Just introduce yourself to the viewers.
Thank you very much, Fumi. I'm happy to be here. My name is Tolu Popola. I'm a finance professional, economist by education, an accountant by training, but by choice, a finance professional. I have done investment management all my career, but I've also worked in the consulting industry. I used to be with ARM Pensions. Then I moved to Deloitte, and from there I moved to managing wealth for a high net worth individual.
Okay.
But also do some consulting for small and medium scale businesses. So I think that's pretty much it. I'm happy to be here. Thank you.
Thank you so much for joining us, Tolu. And I'm sure you're going to give us a lot of insight into the inflationary environment and how to position ourselves properly in these times. So over to you, Kay. So Kayode, I keep saying Kay, but
thank you for me. Kay is fine. Good afternoon, everyone. I'm happy to be here. My name is Kayode Olagunju. I'm a business strategy analyst. I've been doing this for about 10 years now. Started in consulting like Tolu. I've also had some experience in the power sector. I currently work in telecoms. I think that's pretty much it about me. And happy to be part of the panelists today and to have this great conversation. Thank you.
Fantastic. Thank you for joining us, Kayode. And I actually look forward to all the insights you will share from the telco industry with us, because that's one sector most individuals are not looking at closely. We just act more like consumers and hardly put on the investor thinking hat when we consider telcos. So thank you so much, Kayode, for joining us. Bayo, could you please introduce yourself to us?
Yeah. Good afternoon, everybody. Nice to be here today. My name is Bayon Lelawa. I'm a real estate consultant. I call myself a broker before becoming an investor, now a developer. And I run a real estate firm known as One Brick Investment Limited. One Brick Investment Limited is focused more on creating wealth for individuals, for them to live their better life. We are mostly into real estate investment and development.
Okay.
That's what we do.
Okay. Beautiful.
Thank you.
Beautiful.
Nice to be here today.
Nice to have you too, Bio. Look forward to diving deeper into real estate and, of course, the fears of doing business in Lagos. Thank you for joining us. Yes. So Tolu, I think we should start this conversation with you. You seem like the right person to put on, into the boxing ring right now and beat hands down when it comes to considering the times we're in. As an analyst, I'm sure you also probably have done a lot of research. And so it'd be good for us to start today's discussion from a data-driven perspective. Okay, so Tolu, talk to us. Inflation, we're going through a lot of pain. You have money, you don't have money, you have to spend, you have to invest. How exactly should we be taking this? Do you want to get us started on that? Awesome.
Thank you very much, Fumi. I have a few minutes, but I'll show you just a few slides just to discuss this inflation question, right? And it's interesting because, in economics, we say, prices are sticky. That's the way we say it. But effectively, what they're trying to say to us is that things always get more expensive, right? And if you look at the charts on the right, you see the first one that goes all the way up. That effectively talks about the average pricing of things that you're buying in Nigeria, starting from 2009 up till May this year. So you don't see changing costs, right? But you see it going all the way up. The rate of the movement upward is what you see in the chart below, right? So you see sometimes prices go up aggressively. Sometimes it comes down, it grows slowly. It doesn't come like it grows slowly, effectively. So, that's the inflation problem. And, this on the left-hand side, what you see just shows you the fact that in May 2017, if you hold 1,000 Naira and 100 Naira, you could buy a loaf of bread, you buy a dozen of eggs, you buy 1/3 of kilogram of beans, you buy pig milk, and you have a very good breakfast, right? Fast forward to August this year, your milk is gone, you afford bread and egg, right? That's exactly the inflation problem. Things have gotten more expensive, and it tends to stay that way. What that means is that if you say, oh, I earn 1,000 Naira today, but because of tomorrow, I don't want to spend everything. Chances are that when you want to spend it, when you're ready to spend it, it's not going to be worth as much. That's exactly the problem we're talking about. Now, you say, okay, well, I keep the money, I invest, for tomorrow, just for my tomorrow is good. But the challenge you have is that if you're not investing right, because the value over 30 years, the value of that fund would have reduced. Effectively, you will not be able to afford what you could have bought if you had spent the money, right? And you see that over 10 years period that, maybe if you had bought bonds in 2010, you will still have your money will still be worth more than it was worth at the time. But if you had made all these investments in 2000, right? Then you probably won't be able to afford what you should have been able to afford at that time. We see it over 30 years, we see it over 36 years. So really, it's a difficult situation where the rate of price growth is higher than the rate at which assets or investments are delivering returns to you, right? Or they are effectively rewarding you for refusing to spend. They are not rewarding you enough. But that being said, right, I have to say that that's a broad view, but you have to, what this says to you is that that few messages I want people to take out from this. One is that savings is not enough, right? In an inflationary environment, don't just carry your money, keep it in the bank, I will spend it tomorrow. That's not enough, because by the time you need to spend it, it may not be enough to buy what you need to buy. That's the first message. The second message is that when you're making investments, have this framework in mind that is this return higher than inflation? Will this money be able to afford, will help me able to afford what I could have bought today when I need the money in 1 year, 2 year, 3 years time? That's the second takeaway from this. And the third takeaway is what I go into the realm of what should you then do, right? There are investments in all of these asset classes, equities, fixed income, and real estate and everything, or even currency, right? That can reward you. It just depends on which investment do you make. What advice have you received? So it's not just enough to, the way we describe it, to spray and pray. You just spray your money over different investments and you pray that when you need to spend it, the money is there, is enough to buy what you need to buy. So you need to take advice. And that advice is what we'll be discussing in this session, right? There are specific sectors where you should invest in. You'll see some sectors in Nigerian economy, they've done well over the last 10 years, over the last 5 years, over the last 3 years. Some have done well over the last 5 years alone, 5 and 3 years alone. So you'll see the performance of different sectors. And this is structural, there's its underlying structural shifts that you're seeing in the economy, and you should invest in line with that trend so that your money does not lose value. To final slides, I'll say that there's a framework for investing in inflation. So this is introductory. I'll just wrap it up with this slide now. Invest in commodities. That is exactly what it is. So what is inflation? The price of goods, right? And every good goes through a cycle. They need raw materials, they process it, and there's an output. If you are the one that you've invested in the raw material, if all the prices go up, it usually starts from raw materials. And so you would have benefited from increase in prices of raw materials if you had invested in that sector. And there are various approaches. And so commodities, agri-commodities, energy commodities, precious metals, gold, for instance, silver, some of those things do very well against inflation when you compare them against inflation. Then when you invest as well, don't just say, okay, I want to invest in this stock. Ask yourself, what sector is the stock in? How's the sector doing? Who are the bigger players that are really milking that sector? I think that's the way to think about it. So that's it, top to down, the summary of the conversation. We'll deep dive and we'll have conversations on each of these slides as we go forward. Thank you, Fumi.
Okay, thank you so much for that, Tolu. So I already have a question. So you might want to go back to the data you shared on inflation vis-a-vis the portfolio. Good. So I have a question here. What's the inflation rate benchmark you've used for the analysis? So that's a question coming from YouTube.
Okay. So what we've done is to take, the Nigerian Bureau of Statistics publish inflation data, every month, right? We've taken that data. There's an index, number that serves as the basis for estimating inflation rates. So all of these estimations have been based on that index. I should put a caveat that some of this analysis is not complete because of data limitation. We don't have, for instance, bond returns beyond 10-year period, because when Standard & Poor's created the bond index for Nigeria, it started around 2010. So you would not see data that goes all the way back into history, right? Also, there's some data limitation, but this gives you the high-level gist of, okay, when this is a framework, when I'm thinking, I have to think about inflation when I'm making investments. Thanks.
Okay, so I have another follow-up question to the narrative on what inflation looks like now. I know you looked at it in regards to portfolio, but there's also a growing trend in terms of credits to individuals. So we usually call those personal income loans. I don't know if you've paid attention to the volume of credits actually going out to individuals now. I think that's also coming on the strength of the growth in the fintech industry. And it's becoming easier and easier for individuals to actually access loans more than ever before. So if you look at this as an expert in the field, inflation, not a funny situation at all. But then you also have credits increasing at a rate that I don't know if you've paid attention to it, but it just seems like there's so much hype going on around personal income loans. Now, I ask this question because this is a poor country. Most people take those loans to finance basic needs. I've just seen the screen, and if we're saying inflation is affecting basic needs and people are taking loans to finance basic needs, what do you think the impact of that could later be?
Thank you very much for that question. So, two perspectives, right? Theoretically, actually, it makes sense to borrow when inflation is giving you this scenario, right? It's giving you this kind of behavior, because what you'll be paying back, the effective value of what you'll be paying back is less than, do you understand, what you have borrowed? So if, for instance, I had borrowed 1,117 naira in 2017, that means that I borrowed 1 loaf of bread, milk, egg, and beans. But this is 2021 August. I go to the person that I borrowed money from, I give him a loaf of bread, I give him a dozen of egg. I keep, of course, I've enjoyed the beans and the milk, right? So theoretically speaking, it actually makes sense that people would borrow. And it's a natural progression that, so people are using credit, right, to supplement, the weak disposable income, environment that you see, right? And it's a smart decision potentially. The problem is if in a few years' time, right, you need to repay that money, right, and you don't have sufficient income or sufficient assets to pay back that money. So the reasonable thing to do would have been actually today, sophisticated finance professional actually should be borrowing today, right, and investing those funds in assets, right, that gives you returns that you are happy with, so that in 3 years' time, 4 years' time, the value of the money to the bank that borrowed you, that lent you the loan is not as good, and then your assets would have appreciated in value, right? So it would be a win-win, for you in that scenario. It is why people say that, invest in real estate, right? Because, expectedly the valuation grows and, and it goes up and up. So, so that is it. It's you just have to be careful. It's not bad to borrow against, in this environment where inflation is high, especially if your outlook is that prices will keep going up. If you think that prices will come down, don't, then, you'll be paying more in real terms. You'll be paying more back to the bank in real terms. But what you use with the proceeds of borrowing is extremely important, and that is, I think the key important thing that we should take away.
Okay, thank you so much, Tolu. I'm sure we're going to come back to you again, because structuring investment portfolio in the context of inflation is critical, and you might still want to narrow it down, break it down in granular terms. How exactly can an individual do that? But I want us to get into the conversation with telcos, seeing the data you shared around the sectors and the growth there. I know, for example, if you look at your investments in a telco, just looking at the Nigerian Stock Exchange, and you just look at the growth, they're one of the largest, if not the largest, aggregators of consumers right now. And the services we currently get from them are important for any economy to grow or any economy to sustain its growth. So, but at the same time, that industry seems like one part of the puzzle that the average guy on the street might not be paying attention to. And it might also seem that even at a business level, there are opportunities that people are not looking at. So I think this is a good time to have Kyle talk to us about the industry. Telco.